Some more earnings. IGL posted a good set of earnings for the second quarter, beat on all parameters. Volumes also came in line with estimates, and EBITDA per SCM came in above street expectations. Sonal caught up with Kamal Kishore Chatiwal, who is the MD of IGL, to discuss their second quarter performance and spoke about the impact of the Delhi government policy, the EV policy, on the company's future volumes. Listen in.
Yes, the second quarter numbers were very good, in line with our expectation. In fact, they would have been better, but there was an impact of G20 as well as the Delhi floods. So that has impacted around 0.12 mmscmd of volumes. So otherwise, we would have done 8.42. Now, as far as this EV policy is concerned, we are aware of that, and the number that is there, like if you know that 148,000 are Delhi registered cabs. So that in sales volume terms is around 14%. 6% are auto, but not all autos are on with aggregators. In fact, majority of them are at individual levels. If you go around Delhi, you will see that many auto stands, taxi stands, they have autos which are not with any aggregator. But yes, some of the autos are with aggregators. So total number of autos and cabs, Delhi-based cabs, is around 20%, 14% with cabs and 6% with autos.
Okay, so in that case, sir, have you been able to assess the absolute amount of impact that you'll have? Have you been in touch with the Delhi government? Because even they are shareholders in your company. Is there any possibility of any amendment there?
No, we have been in touch with Delhi government. In fact, we met the Transport Commissioner as well as Transport Minister. And we fully understand the problem that is there in Delhi. And you may be aware, the pollution is an issue in Delhi. And EV, as you know, it moves the pollution from congested cities to outside cities. Okay, so there are very little option as far as Delhi is concerned. But we have our strategy to how to mitigate. So within the city, we feel the public transport, these taxis, maybe majority by EV, but interstate volumes as well as the NCR satellite towns volumes, they may be through CNG. Okay. Like TC is currently has got some of the licenses of NCR cities, but they are not operating those licenses. So maybe in the coming years, they may be operating satellite town services, like, for example, Delhi to Gurgaon, Delhi to Noida, Delhi to Ghaziabad, of these NCR satellite towns.
Okay. So in that case, what's the current volume coming in from NCR region? The last I remember, it's substantial. It's around 88% coming in from NCR itself. So when you're talking about public transport, the other modes as well, do you think your volume mix will also change and there will be other geographical areas that you would add to mitigate this risk?
So you're right. Earlier it was 87%. So that has come down by 1% to 87%. So 13% is coming from outside NCR, and that the outside GAs include Rewari GA. So that is increasing every day that those sales are picking up. And we are hopeful that going forward, so that number should touch around 25%.
25%
and
by when?
Interstate buses, as you know, from 1st of November, the CAQM guidelines are also effective, where you see the only diesel buses are banned, and only Euro 6 compliant diesel buses, CNG and EV, are allowed to enter Delhi from other states. So we have the numbers for Uttarakhand. There are around 500 buses coming in Delhi. Haryana has been around 600, and similar numbers are for Rajasthan and UP. Slightly higher numbers are there. So those buses would be impacted, and we are in discussion with those STUs, state transport undertakings, to have them converted to CNG, because that is one of the fuels that is allowed in.
Okay, interesting. So what would that take your total volumes to, say, 2 years down the line, and the 25% coming in from non-NCR region? By when do you expect that to happen?
So around 3 to 4 years. 3 to 4 years time, because one of the areas that we have identified is the huge number of dumpers operating in 2 of our GAs. One is Banda, Mahoba, Chitrakoot, where the stone crushers, that is supplied across India. The second segment is the sand segment that is in Hamirpur and Fatehpur and the Yamuna belt there. So these two areas combined have around 6,000 to 7,000 dumpers, and which we feel 50% of that we can convert in another 3 to 4 years. So that should take care of whatever loss we have here. We are hopeful that we can, and it will require some effort on our part, but there is a possibility there.
Okay, so let me give you some numbers. 8.3 mmscmd, that was the second quarter volumes that you reported. If because of this EV policy, suppose 20% of those volumes are impacted, by when will you see that impact? And that impact, how will you cover it with the additional GAs or the additional volumes that you're talking about? So say 2 to 3 years down the line, what kind of volumes are you looking at?
You see, if you have read the policy, what it says is that the new additions, so whatever 2 years, 3 years, 5 years numbers are there, that is for new additions. So as you know, for four-wheelers, if we talk about four-wheelers, so in 3 years' time, they will be at 50%, 5 years' time, they will be at 100%, starting from 5% in 6 months' time. And so that is for the new additions to the aggregator vehicles. As far as the overall is concerned, by 2030, they have to convert to, all the taxis have to convert to EV. Now, recently, the taxi operators, they informed us that they have got the authorization from Delhi government to run for 15 years. Those taxis are allowed to run for 15 years. So there is some bit of clarification required with what will happen to those taxis, because they have been permitted for 15 years. So we are hopeful that maybe, but you are right, that shift will be there. So we expect that 3 to 4% impact will be there immediately. And so that we have to mitigate. And going forward, by 2030, this impact will be realized, if at all it is there.
Okay, all right. What about EBITDA per SCM? You have done EBITDA of around 8.5 rupees per SCM right now.
8.6.
8.6. So what's the guidance going forward?
So we will be maintaining that. Now we have to understand that this 8.6 we have been able to maintain despite our input costs going up from Q1. So Q1 we did 8.57. This we are maintaining at 8.6. Going forward, this above 8 we will be able to maintain.
Okay, all right. And volumes for this year, will you see the impact immediately, or it will be around that 8.3 mmscmd mark in FY24
We will
as
be ending the year at around 9.
At around 9. Okay. And what was the conversion rate this year, this quarter, Mr. Kishore, in terms of CNG conversions?
So we hit a peak of around 16,800 or 17,000 mark in September. So in October, there has been a slight dip, but that has been the peak. So 15 to 17,000 is the conversion rate.
All right, that was the management of IGL saying that 87% of their current volumes come in from NCR, but they are diversifying, and over the next 3 to 4 years, it will be only 25% exposure to the NCR itself. We take a short break. On the other